Hi everyone, welcome to Bond Bytes, the daily bond market highlights from INR bonds. I'm Arjun Patsarthi, and in today's market, there is the story is all about risk aversion. Equities fall sharply. The rupee weakens well below rupee 75 to the US dollar as markets worry about the new COVID and its impact on economic growth, as well as the fact that the Fed is continuing to sound hawkish as inflation fears lift the US markets. US unemployment rates fall to 4.2%, the lowest since the start of the COVID. And as I keep mentioning in bond bites, with the sharp gap in demand and supply of labor, with a huge amount of jobs lying vacant, the wage growth impact on inflation is only increasing. And in this scenario, clearly the gainers have been US Treasury yields that have fallen to 1.35%, down 30 basis points from highs. While in India, the 10-year Gsec yield has largely been stable, not really mirroring any kind of weakness in the equity markets and the rupee. And the US junk bond yields, which is again a sign of risk trades, yields have risen, though still at lower levels, but still higher than what almost by 50 basis points they've risen from lows, which shows that global markets are turning very risk averse. And what could this mean to Indian markets, G-Secs and corporate bonds? On the Gsec front, clearly, I think the bonds, the yields are largely likely to follow what RBI is going to say in this policy this week. While in corporate bond yields, again at the highest, at the best, lowest yielding bonds, which are mostly the AAA and PSU bonds, they would follow Gsec. While the higher yielding bonds, depending on the fundamentals of the issuer, they should largely remain stable, given that they're already trading at higher yields. So that's about it for Bond Bytes today. Don't forget to log into our Quickiness platform to see the best bonds and invest in the best bonds that is available for your portfolio. So a curated list of bonds. And you can invest with the most information, transparency, and ease of transaction and investment. Thank you very much for listening in, and do not forget to subscribe to our YouTube channel if you're not done so already.